everybody, Joseph Damiens from Damiens Tax Law. I'm here with Casey Cade from Cade CPA firm. He kind of joined us today to talk about, one of the tax deductions that's kind of like the TikTok hot video these days is the Augusta Rule. So we're just going to weigh in, throw our 2 cents on, on the matter and kind of see if we can filter out who this might be for and who's a good candidate and if it's something you might need to take a look at. It's not something we do on every case, but if we have business owner clients that we're kind of pushing new tax brackets and we can marginally kind of reduce some income, it's a good way to spin off. It dovetails with other strategies. Well, it's not something you're going to see huge deductions on because you're going to have to substantiate kind of the rental amount that you can charge and pay off to yourself as the rental fee, but it does work well. Just some background, kind of what it is. Casey, you got the FedEx Cup going on up there, the FedEx tournament. It originated out of the Masters Golf Tournament with the homeowners wanting to rent their property to visitors for the tournament. And what it allows for you to do is to deduct rental payments to yourself personally from your company up to 14 days per year. And those have to be reasonable. So, a Jackson, Mississippi rental facility is a lot different than like a New York City or even Memphis or Nashville or wherever it might be. So who's a good candidate? I mean, we're looking for basically businesses that, are making a decent amount of money. I mean, several $100,000 a year, I think is probably a good candidate. From there, it's going to be, the steps to do it is to basically determine fair rental value, like what your area is. I think sources of that are maybe calling other vendors or maybe even Zillow might have some of those options or some of the online things. But, some examples I see people use it for are company meetings at their house, like company Christmas parties. Want to host an event at your house, your company can, pay you for the use of your home, food, drinks, things of that nature to facilitate your business. And company meetings might be another option. It works really well with like either a second residence or something that you're not using all the time. It's not like a full-term rental option. You don't get to rent it out full-time for a year and deduct it. It's more of a, 14 times a year maximum. If you go over that, I think there's some pretty big penalties, right, Casey?
Yeah. And speaking of the second home, the question that I get most frequently is, hey, I've got a condo down in the Gulf Coast, whether it be in Orange Beach or Destin or 30A, wherever it may be. I'm going to bring my employees down there and we're going to have a company meeting. Well, first question, do you rent it out? Yeah, all summer unless we're there. Well, unfortunately, there you don't qualify because you're over that 14-day limit, as you mentioned. So that's one of the main questions I get where you have to squash it, unfortunately. But in the case that it's your primary residence or even the secondary home and you're not renting it out more than 14 days annually and you've got a cushion under that 14-day limit of, okay, we can do that. And keep in mind, like Joseph said, you got to say it's a fair market value and it needs to be ordinary and necessary. If you've got a business where people don't travel way off, like going back to what Joseph said, it's usually going to be maybe some professional service oriented business or something. But in the industry, you just can't take a trip, down to the Gulf Coast when it's really not ordinary or necessary in that industry.
Right. I mean, that's important. It's, the plumbing business, it might not work. I mean, you maybe could have annual retreats or something for that, for management, maybe. Again, it's just an ordinary and necessary test and how that stacks up. But it does work well. I mean, it can shield some income. I mean, it's an expense that's deducted by your business that's not necessarily counted as income on the return or taxable income on your return. So, to the extent you can shield some of that, you can reduce tax rate in that regard. And it is a one good tool of many different tools that can be used.
Yeah, one thing I would add to that is when it does come into effect and everything works out to where it qualifies, the first thing is, okay, well, I don't have to do anything on my tax return. Well, I would encourage as a best practice, you still need to issue yourself a 1099 for what you paid from the business. That way you don't get that deduction disqualified at the business return level, whether it be on your personal return or a separate return. And then you would report that income on your personal return. And then what I do is we put another line and other deductions on the Schedule E for rental income that completely offsets that amount when we put, code section 288F, Augusta Rule exemption. Mm-hmm. So that way you've met all your compliance issues from both ends of the business and individually.
Yeah. And I'm going to follow that up with talk to a tax advisor before you take that deduction for sure.
Yeah, I mean, but yeah, absolutely.
Yeah, absolutely. So any other questions anybody has, y'all can free to reach out to us on the website or Casey or myself. And if you're interested in tax planning, just fill out the form below and we'll see if we can help you out.